What's going on, YouTube? It's TerrenceRe, and I wanted to do a stock market technical analysis of today's action. So, without further ado, I'm gonna go ahead and get started. I don't want to make this a long video. I'm gonna go through. I'm gonna touch on the headlines of today, how it may or may not affect the market. Take a look at the FX market, which is something I hadn't been doing before, but I will do. I actually have a trade placed in a currency, so we'll look at that, and then we'll go over the expected move tomorrow for the SPX. And I'm gonna go ahead and make my screen big, full out. That way, I know you guys can see what's going on. So right now, I got a chart of the bonds up, which really you can see is trading in a range. Now I'm gonna take this off the screen so you guys can see what this is. What you're looking at is called the Fibonacci Extension, and I use that to kind of project out and look at to see like price targets. So what I'm gonna go to is the SPX, which is the S&P 500 basically. Now you can't buy stock in the SPX. You can buy the ETF, which is the SPY. But in the SPX, you can do is mainly just options. So let's take a look, and I'll show you what I'm looking at. So if we go back, I'm gonna pull up like a 3-year daily, right? And if you look right here, you will see right here the coronavirus. This is the dip from the this top right here was February 19th, and this is when you can see the market just tumbled. And this was like in the from February 19th to what, March, that's the 23rd, that last candle right there. So basically like a month, the market fell. And so from that bottom right there, and what you can see, I imagine I'm just going off of, off of memory, like let's see. If we were to go back and look at the news right here, you see where it gapped up and you got this full green candle right here off of the lows. That's probably when the Fed came out and announced, they started going into the bond market and, purchasing bonds and, printing money and going crazy. So if I were to take this bottom and then do from the bottom, I'm using my Fibonacci extension tool. So from bottom to, let's just go to maybe this top and this bottom. So that's 1, 2, 3, and then it projects it out. So from there, I like to look at targets. You can see where it came up and hit right around here at 100, the 1618, 2618, and you can kind of see like it bounced around here, here, here. You can either see it wicked right here, and then it came out, and then it marched up. And so this is the last level right here for 23.6%. And we're kind of like just been hanging around. Now this right here will be called, I'm gonna take that off because I just wanted you guys to see, like from there, once I get a target there, and I'm gonna also show you this in Costco, because in another platform I got a put spread on in Costco and I'm still holding that spread. So you can see right here where it respected. It's just kind of like once it got here, for me, I'm looking to get bearish whenever I see stuff like that, right? So this also, I'm gonna remove this just so you guys can look and see. Move this down. This is kind of like a wedge. This is kind of what you would call an ascending wedge. I'm gonna make it go to a year, and let's just look at it like this. I'm gonna remove all of this because I want this to look clean. So what I'm gonna do is take a trend line and go from maybe like here, draw it here, and then come, let's find another point, another top, like maybe like this, right? Something like a wedge. like where basically like where the market is like coming to a point, and you can see where it's just going up and just bouncing back and forth. It'd probably be better to do it like this. And you can see it kind of like bouncing back and forth in here and just staying, and it's getting narrower and more narrow and more narrow. And so like a lot of times when you see something like that, you're looking for it to either you want to see it either break down. I don't want to do that. Let's go back. You want to see it come out of here, like break this area, and then this is where you would look to see the market tumble, right? You will want to see it break out of this little wedge pattern up here. I actually got something on here where it automatically draws it for me. Sometimes you can see it if you can see the dotted lines right here. You want to see it come break out of here and then come back and retest this moving average or somewhere like right here, and then flag and then come down, right? Well, I'm not saying you want to see that. I mean, if you got a long stock portfolio, which we all do, if you got like, an IRA or 401k or something like that, or you got like you just somebody who hold long stock. Now, I have a 401k through my employer, so and I actually manage that myself. I just started doing that recently, and so I'm long. I'm long bonds and I'm long some gold in there. And so I'm long, in that portfolio. So in my active trading accounts, I like to predominantly trade short, right? So there's no sense in me being long in both accounts. That's how I look at it. Now, with this setup today, so obviously today we got some news out of the what happened in Kabul, with see with there was an attack. They said that there was an ISIS-K. Now, I'm not trying to get too political. I never heard of ISIS-K. I heard of ISIS, but I had never heard of ISIS-K. I don't know what that means. It was kind of, it was. I'm like, here we go. I don't even know how you fight somebody who don't have a uniform, but that's neither here nor there. But there was an attack at the airport while people are trying to get out. So for what I understand, the last total that I heard was like 13 Americans, and then they didn't have an accurate estimate yet on how many Afghans, or I think that's how you pronounce Afghans or Afghanis, that had unfortunately, excuse me, passed away, or were killed in the attack. So we did get a nice red candle today with that news. Now tomorrow, you're gonna have some Fed speak tomorrow. Um, and they're gonna come out and announce. Now, this stuff is already baked in. I'm gonna show you. It's already baked in. The VIX uh, went up 12% today. It was up $2 today in the VIX. So the VIX is measuring the volatility of the S&P 500, which is the SPX. So this stuff is baked into the market, and you can actually watch the. If I go to the trade tab, I'm gonna go to the options tab and the SPX, and you can see I have a position on. I have a short position on here, and I was just watching the implied volatility. You will see these numbers during a live market. You can see these numbers moving. You can see the expected move moving, and right now it's showing that this. If you go, the option contracts that I have right here expire in 21 days. But if you come up here, you see there's one for tomorrow that's 1 day. So tomorrow they have priced in about a $30 move, up or down. It's already priced in. And if you look at it, so what you're looking, so that what they're saying is they're expecting the market to move tomorrow $30 up or $30 down. So with it being closing at what 44.70 today, that means that it could go down to 44.40, or it can go further than that, but that means that that's where they're pricing it at. And then it could go up 30 to 4,500. So they've already priced that in. And so I don't expect a whole lot tomorrow. I expect now that could change. A black swan event, which is something that's not priced in. I talk about that on a previous video. We could wake up tomorrow and hopefully nothing like that happens, but you could wake up tomorrow and it could be another attack and kill more people. Or, you know, President Biden make a move and they do some kind of strike overnight, something like that out of the ordinary to spook the market, because the market is kind of teetering right now. So that could make the market tumble down, and we're due for a correction. So and I also want to what I took that off when I started the video, but I'm gonna show you what I'm looking at. So we had this high, and then we had a little pullback, right? And then we had this took out this high, and this right here is an engulfing candle. This one red candle took out 1, 2 candles, and it came to the middle of this third candle. So what I had drawn up here was kind of like a Fibonacci retracement. And I just wanted to see, I'm gonna flip this around the other way. I want to see how much of a retracement from low to high that we get. Now I'm gonna come down into like intraday. Each one, I'm on the daily chart right now. I'm gonna come down and go to the, let's see. I'm gonna come down and go to the hourly. Now each one of these candles is an hour. So this is today's action right here. So what I did, these are levels to where when you get retracements, you want to see the retracement come back to either 38% or right in here around the 61.8% retracement, right? So that will bring it down. What is the expected move? About $30. So if you got your $30 move, that will bring you right around in here where the gap is, right? So if it went $30 up, it will take you what? Right up here to right around where the high is. So this is the little range that we're dealing with. And what I also did, what I had up here was I did a Fibonacci extension for intraday trading as well, because sometimes I did scout Costco today, so I'll show that real in a minute. I like to sometimes trade intraday. So this is what I'm looking at. These are my levels, right? And how did I use these levels? I'm looking at the SPX right now. So if you look, you'll see that the 423.6 extension of an intraday move will put us right down here at 43.51. Now, I don't know that anything is going to come of that, right? So what I like to do is take a cheap shot when I see something like that. I put on a butterfly spread. I put it on in the SPY and not the SPX. The equivalent. So basically, instead of it being 43.51, if you look at this in the SPY, it's going to be 435, right? It'll be, you can see I already got it on here. See where it's going, basically it's saying 434.21. I came about 435 right there. And that's right there at this little area right here is right here. If we go to the 3-year daily, that's right here at the top right here, right? So what I did was I put an option spread right around that area. It's like basically like a little cheap shot. I try to make a little money. And I'm gonna show you the trade that I put on. I put this on today in the SPY. Let's go check it out. You see it right here at 35 days. We're gonna come down the option chain and you can see the button. So with a butterfly, I'm gonna show you what it looks like on the analyze tab. So I sold 2 of these and I bought 2 wings. So I sold 2 of the 435s and I bought a wing at the 430 and I bought a wing at 440. What do I want to do? I only paid, it was a cheap shot. It's like a lottery ticket. So it's a very low probability trade. But if I'm right, I could make a little change. Um, and I'm risking, let's see, I'm look at field orders. I paid 24 bucks for it. So if you look right up here, you see where it says 0.24. That means I paid 24 bucks for it. And you see it says butterfly. And you can see how they're grouped together. I got it set up to where it's grouped so you can see the butterfly right here. Um, if I was to think of swim, you can do so much with it. I changed it over to put everything together where you could see. Um, but it doesn't when I use the old layout, it doesn't show the individual trades. It doesn't group them like that. So I put the butterfly spread on and it's down like a buck. So basically I paid 20. Now let's go back to the option chain. I paid $24 for it. You say, well, how much can you make? The width of the spread from the center to the wing is $5 because it's $5. So that means $500 profit minus the 24 bucks that I paid. $476 is what I can make on $24. I mean, I probably got like I don't know, a 10% chance of hitting that, maybe even less than that, right? But I feel like it's worth it. We get the down move, volatility expand, and I'm not gonna look to make to make that full profit. You got to hold it to darn near expiration. I'm probably gonna look to if I get the move that I want and it goes through my strike price, and I'm gonna go to the analyze tab so you guys can see. Excuse me. Let's see. So here's the analyze tab and think of swim. What I want to look at. Let's see. Let's come down here. Let's hide simulations. So the only thing I'm showing right now is the butterfly. I took off everything else because you can actually come on here and I can show you. You can put your whole portfolio up on this analyze tab, and then you can like if you got a real large portfolio, you can really manage your risk by looking at deltas and things of that nature. And that's something a video that I may do in the future. But so let's look at. I'm gonna come over here and click set slices. Come up to break even and the expiration is October 1st. I'm gonna come over here and change this to October 1st. And now you can see that if you look at this, you can see now what do I want to happen? I want price to make it into here. And it's telling you, like, look, you got like a 13.83% chance of getting the market in here, right? 13% chance, risking 24 bucks to make, to make a nice little, change on it. So if you look at it, and this is actually showing you on a graph what you need the market to do. I need to here on my break evens 430.09 and 439.76. I need it in between here to make profit. And you can sit there and you can see. And if I was to step it out like over time, the longer it takes for the market to get there, I don't want it to get there fast. If it gets there fast, I probably will close it out and still make a small profit. But the longer it takes, you'll see this begin to stretch out. So what I'm gonna do is go up here and I'm gonna click on day step, and I'm gonna put +4, and each one of these lines. Let's see if I can. Day step. I want to use expiration. You're not doing. So you can see if you look down in the left corner, it's showing you like, so if let's say it gets to my target by tomorrow, the 27th, I can make 18 bucks on $24. If it gets there by September 4th, look in the bottom left hand of the corner of the screen over here. it's showing you the turquoise one, which is this one. I would make $23, right? You can see it moving. Let me reset that back. I clicked it. Kind of changed it up. I clicked the wrong button on accident. Let's see. I'm doing this live, so I ain't editing nothing out. I ain't got time to edit out. Let's go back. I need to reset it. Let's set slices to break even. Now let's go back, and I'm gonna go back over here in day step plus 4. And I'm gonna change it. What is it, October 1st? We'll keep it at each one of these at 8 days apart. Okay. So you can see this little red one right here. If it gets to where I need it to be by September 12th, that's $32. By September 20th, it's $48. By September 28th, it's $113. You see? So actually, I actually, it can take its time to get there. Butterflies actually, progress with time. They get better for you the more time you have, long as it's moving in your direction. So that's a cheap shot. Also, I wanted to go over, I talked about the spread that I have in the SPX. I had some notes over here because I want to make sure I hit on, and I wanted to go over the FX market, do a little Forex, a little currency talk. So let's look at the dollar. And then the Thinkorswim platform is $DXY. So that's where you see a US dollar index cash. This is a chart of the dollar, the US dollar. So you can see over the past year, it's been falling. So you got like a low, then you got a high, low, high, low. And if you look over here, you got like another little wedge where it kind of looked like it's breaking out. Now, it could break out and continue to go up, but I have divergence on the RSI, right? So look at the RSI down here. RSI is diverging while the market is going up. For me, divergence is signals to me that may get a turn in the market. So if you get a turn in the market, then that means that if the dollar goes down, then that means you can get long other currencies against the dollar. Maybe the Australian dollar, or the British pound, or the euro, or something like that. What I did was, I don't even remember how I found this. I just was kind of like messing around. I got long the Swiss franc, but I got long in the futures. Now, the same thing I'm going to show you, it's the same thing as trading USD CHF, and I'm going to show you, but it's in reverse, because when you trade the futures, see the micro Swiss franc, it only ties up $363 of margin. It's $1.25 per tick, right? I'm down on the position right now, and you can see my stop loss is here below this low, and I'm taking profit here, and the market is right here. So it's kind of like right in the middle, but I kind of got in like a little bit up here somewhere, right? So I'm looking for the dollar to come back into that zone that we were just looking at, and then that will cause the franc to go up, right? So I'm trading like that relationship. You can now, I'm gonna look at the USD CHF, right? And what you're seeing is you're saying, well, that look at it. All it is in reverse. You see this right here? Look just like the chart we just got through looking at. It's the same thing. So you can trade the futures, trading the futures and trading the spot Forex market is basically, yeah, they are identical for the most part. They move the same way. So it's not like, so I just like to use the futures market. I could take money and move it to a Forex account. I'd rather do it all in one account and do it all on TD Ameritrade and Thinkorswim, or either do it in Tastyworks or something like that. Tastyworks has futures as well. So and that's the way. I don't like using these brokers that's out of the country. To me, you playing with fire. If that's what y'all, if that's what people want to do, then that's fine. But I don't mess around with trash brokers. I'm not trading. I don't have no money in Robinhood. I'm not the same thing against Robinhood, but it's not something that me personally, I don't recommend it to anybody. Just from what's going on with GameStop and AMC and all that stuff. So, but anyway, so you can see so I got basically three positions open right now. I'm just building a little portfolio, something so I can come on here and talk about. But basically, you can see I like to use Fibonacci to get into trades, and I like to use it to take profits. You don't have to do that to invest or trade, but in my opinion, you need to have a reason why you're getting into a trade and a reason to get out, right? Well, a lot of times people just say, well, I'm just gonna buy and hold and hold and hold and hold, and I'm gonna do like rich people do, they never sell. It, that may be true to a degree, right? So somebody like Warren Buffett don't need to sell, right? It, he may sell like there if he's selling is to move it into something else, right? But he can live off of the dividends. And what rich people do that they don't tell you in media, they're taking loans and borrowing against their stock portfolios. There are banks, JP Morgan, um, Goldman, JP Morgan, Morgan Stanley. There are banks out here who will loan you money against your stock portfolio, right? But it's like they have minimums. I know I've heard of companies the minimum is $1 million. That's the minimum, but it's dirt cheap interest and with some of these places, it's no personal liability. Like it doesn't go against like your stock is your collateral. It's no personal collateral. And so that's one of the things that if you got that kind of money, then yeah, you can do that. But I would say even if you own a large, like let's say you got 100, let's just say you got 1,000 shares of Apple, right? And you don't want to sell it. You don't have to sell it. Don't sell it. So you can sell calls against it though. It makes no sense in my opinion, let's look at Costco. Costco been beasting. Look at Costco, right? Costco was all the way down here. We're looking at right around $200, $100. Look at Costco, all the way up to $439. All right, on the RSI, it's red. It's up here over what you consider overbought. That doesn't mean that it can't still go up, but traders who do technical analysis, and trust me, these prop firms, these hedge funds, they have something. Even if they have algorithms, those algorithms will look at are trained to look at certain levels, to look at buying and selling, and it makes a split decision at that moment. And they're looking at these things like they have like certain moving averages, like the 50-day moving average, maybe the 200-day moving average. Maybe they're looking at Bollinger Bands or MACD, something like that. Or they could be looking at like they have some that looking at fundamental analysis that flag and stuff like that. But when you see a stock like this that has ripped and you just sitting on, I pull up Costco. I know I say Apple. Let's say you got 1,000 shares of this. You just gonna sit on here and hold it, and if it come down, or I'm just gonna let it come down. You don't have to do it. You can hold it and sell a call against it. You can come in here and sell and especially like right now, you can come in here if you owned 100 shares. You can just come in here. I mean, 1,000 shares. You can come in here. You don't have to sell 10 calls. You can come in here and sell one call. You can come in here and sell. I don't know. Come to the about the 32 delta and sell that, collect $605 of premium. And so what that does is that that takes some of the risk off of your long position. And what one of the things that I'll look at doing, that I was thinking about when I did this video, I'm gonna do a paper trading account on here, and then I can go on there and I can put like fake trades on, but I can show you guys what I'm talking about by selling calls against your existing position. Pretty much went over everything that I wanted to talk about. Once again, I am long the if you see it come down there, I got a stop to take me out. I normally don't use stops, but when I'm trading like futures and I'm just, that could hit and I'm not even be looking at it or whatever. I got to take profit on that long Swiss franc position. And I'm looking, and I got that butterfly and the SPY, and I got this short credit spread in the SPX. I'm down like 55 total. I was down like $105. You can see I made $50 on the day on it. So it came in a little bit with the down move. I want that down move, or it could just stay where it's at, and eventually it'll bleed out over time. With theta decay, and you can see on Costco. You can see right here, I made like $44. I bought a put today in Costco, and it was just like a little scalp. So I scalp an option. Like I was looking at it. I was looking at it on like I think it was like the 5 minute or the 30 minute. Let me see what I was looking at. Cause I remember. I think it was like right here. I seen it come up and wick, and it respected the moving average. This is a Wilder's moving average. And I seen that when I seen that wick and it respected it. And then I think I bought a put like right in here. And it came down a little bit, and I was like, you know what? It was started slowing up, and I was like, let me go ahead and just take this little profit. So I came in, bought a put somewhere in here. Let's see. When I'm buying puts, I go to the weekly, like the shortest expiration or calls. It just depends on what I see, and I come in here and I'll whack one of these. Now tomorrow, they're pricing in almost a $5 move, $4.51 in Costco. So I'll be watching this tomorrow. We might get another down move tomorrow. I'll come in here tomorrow. It would expire tomorrow. I will come to like the 50 something, 56 or 50 delta, and buy one of these for like 200, right? You get a little $2 move. If it moves $2.50, you'll double your money. You see right here, you pay $237, sell it for $420 if you get that move. So that was that. That was the day in trading. Hopefully you guys got something out of this video. If there's something else that you want me to go over, if you got a currency pair, I know Euro USD is a currency pair that a lot of people trade. And you can see right here, you kind of got like that megaphone, right? Got an expanding. See how it's expanding? Come on, right here. Y'all see that? Just highlighting it, coming through the wicks. So what we gonna, something like this. What is the euro? What is the dollar gonna do? This is the Euro USD. And I'm looking at that's the 30-minute. Let me go. I don't even like doing it like that on the 30-minute. I'm sorry. Let's go back to let's take that off. Let's look at the daily. All right. We got a low, high, low. Still hadn't made a higher low yet. So to make a trade in here, what I would like to see is to come take this. I'd like to see it take this high out, right? I want to see the market come through there and then come back to this level and then test it. And you can either get long here, or if you come back and you think it's going to rip down, you can get short. I like to get to me, that's a trading zone. So I want to see it make another high, and it hasn't made another high yet. So I would like to see it take this out first and then come back into this zone and then look to make a trade. So that'll be with that. Let me know what you guys think. Hit the like button. Please subscribe. Um, and let me know what you think. Put something in the comments so I can, get my views up, stuff like that. I'm doing, I do whatever you guys want to see me do something on. I can trade any market. I could talk any market. I can do technical analysis on anything. I can explain just about anything. Um, it just ask me whatever you want to ask me. And with that, I'm gonna end this broadcast. Peace.